Hey everybody, just a couple quick things I want to cover before this episode. The first is when we're talking about the deferred loss on capital gains, this will make sense in a second. What I want to stress is that deferred loss can be applied unrestricted against capital gains, which is why it's such a benefit for the wealthy. If you were to apply it against other income such as wages, then you will be restricted to $3,000. Another thing that we're going to talk about is the benefits of being able to transfer from one fund to another. And now there is a wash rule that applies to that, and that wash rule says that you do have to wait 31 days before transferring from one fund to another. That'll also make sense here in a minute, and it does show some small level of restraint applied to our tax code. So thank you and enjoy the show.
Hi, this is Chris Harris, and welcome to another episode of Believe in We the People. So today what I'd like to talk to you about is the capital gains tax, why we need to raise it, and why we need to close some of the crazy loopholes that exist within it. So first off, what are capital gains? Well, capital gains are the profits that people make from speculating on the market. That could be stocks, that could be commodities, the housing market, any of these things. So for example, say you buy a stock for $100. And then you wind up selling it later for $200. Well, that $100 profit is where the capital gains would get assessed. Now, here's where it starts to get crazy. And to show how absurd it is, I want to put it in the context of, say, winning the lottery. What we're going to talk about is this concept of deferred loss. So, say you win $1 million one year in the lottery, and you think you can do it again. So the next year you spend $500,000 trying to win the lottery again, and you're unsuccessful. But then in the third year, random chance, you win the lottery again. You win another $1 million. What deferred loss says is that on that $1 million, there's roughly a 30% tax, or $300,000. They will allow you to deduct the losses from the previous year against that money. So $300,000, you lost $500,000. So there's two. So that's completely washed. You get that entire $1 million. Plus, should you win again, there's another $200,000 still waiting for you to apply against whatever those future winnings might be. Now, that in itself sounds kind of crazy, but it gets even worse, because normally you would at least have to pay the 30% tax on that first $1 million. And that's crazy in itself, because our capital gains tax isn't even 30%, even though it's gambling. What you can actually do is a really cool accounting trick. So say you have a fund, like a mutual fund, just a compilation of stocks, bonds, various investments. And say that fund takes a loss. You can sell that fund, find another fund that has the exact same things bundled in it, buy that fund, wait for it to increase, and then when you sell that fund, you can count the losses from the previous fund against it, even though it's the exact same thing. The only thing you've done is change the label on the bow. So that's really how absurd it is. And I want to ask you, do you think that's fair? That we as a people are saying through our government and our tax code that it's okay for the wealthiest among us to speculate on the market, to make astronomical profits and personal gain, and do that to the point where they inflate the market to a bubble that eventually has to collapse. And when it does, it wreaks havoc on everyone, which we're talking about, say, the IT bubble. Or say even more relevantly, let's talk about the subprime crisis, because that's exactly what this is. And do you think it's fair that in turn, what they're saying to us is that, well, it's really difficult for us to figure out how to reduce these interest rates. You have to go through these modification processes. You may or may not be eligible. We want to help people get out of foreclosure, but it's really hard. But at the same time, somehow they find it very easy to foreclose on these people and say, hey, but you know what? I'm going to buy that house and rent it back to you. And that's exactly what's happening in America today. So what I'm proposing is that you believe in America. You believe in we the people. We raise that capital gains tax, and we close these absurd loopholes that allow the rich to ultimately hedge their bets to no end, so that as long as you've got enough money to weather the storm, which they obviously do, because as the market's rebounded and corporate profits have skyrocketed, they're doing just fine. And it's the rest of us that are hurting. That you allow us to take that money that we gain from doing the right thing, raising the capital gains rate, closing loopholes, and redistribute it into the economy through our government so that we can get that multiplier effect that I've been talking about and benefit us as a whole. So again, I'm asking you to believe in we the people. Thank you.